Let's talk about Grab. Let's talk about Grab. So I spent a lot of time talking about Grab with some people on Friday. Friday, after I did the market close at 7 p.m., I went into basically what turned into a 6-hour meeting with like a 30-minute break, but it was a pretty long meeting discussing Grab. So one of my friends, Sebastian, which you guys probably know, he actually did one of the OG Palantir valuation videos with me. And we did that video back in January 2022 when Palantir was $12, and we were trying to figure out what valuation should Palantir be at. And so he's been on Palantir for a long time. He's been on Tesla for a long time. He recently just sold some of his Tesla, but he's been excited about those names for a long time. And when he gets into a name, I get very interested because he's a really creative young guy, and he's not like super Warren Buffett. I need to see like a 10 PE or something. He's willing to invest in things that are a bit more expensive. He just wants to see the growth story. And because he works in private equity, he's very deep in numbers, very deep in valuations, very deep in EBITDA multiples, because a lot of private equity trades off EBITDA multiples more than like price to earnings or price to sales because they're not public companies. And so his argument to me after he read a couple of my tweets and then he called me up was like, hey, I'm getting interested in Grab and I want to talk to you about the numbers. And so we started talking about the numbers. Here's the bottom line. Grab right here up 3%. The bottom line is we think Grab can do $800 million to $1 billion of EBITDA by 2026. When you put a 40 multiple on that, right now they're trading at a 45 trailing 12 months multiple. Maybe that multiple gets compressed to 35, but around that 35 to 40 multiple. And you add about $4 billion in cash. They're adding about $500 million in cash per quarter. Right now they have $6 billion liquid. I think in the next 2 years, they'll have probably $10 billion liquid. And if they don't have $10 billion liquid, it's because they either bought back their shares, which is great for shareholders, or they acquired a company, which by the way, they acquired a company on December 30th that we'll talk about. I didn't even know they acquired a company in Cambodia on December 30th. I'm seeing that news this morning. But if they don't have 10 billion in cash, it's probably because they did something for shareholders in terms of buying a company or by buying back their shares. This stock will be around 12 to 15 bucks by the end of 2027. And that's being relatively conservative with their estimates in terms of their EBITDA growth. These guys are growing EBITDA 60% year over year. And that's why they're trading at a higher multiple than Uber, even though their market cap is significantly lower. And that's why the street's getting excited about them as well. So the kind of summary of what we talked about is when you look at their EBITDA multiples, they will be trading at a healthy EBITDA multiple in 2026 if they can get to about 800 million to $1 billion in EBITDA. So that begs the question, can Grab get to about $1 billion of EBITDA by 2026? It does look like that's the case. They were estimating 180 million of EBITDA this year. They raised that to 330 million. So a pretty substantial increase in Q3. Now we're going to see in Q4 what they ended up doing for the full year. But if they guide for about, let's call it 500 million in EBITDA for 2025, which I think they might sandbag because they've obviously sandbagged for the past 3 quarters, kind of like Palantir was sandbagging for their profitability in 2023. If they sandbag and we get a dip off of a sandbag of EBITDA, because the street's expecting about 470 to $480 million of EBITDA, let's say Grab does, I don't know, 420, 430 million of EBITDA, then maybe that creates a dip. To me, that's a great opportunity because, first of all, that's another thing we talked about with Sebastian, which is that the downside is limited. I mean, shares are trading at a 66% enterprise value compared to 33% cash. So, I mean, like every $1.30 of the stock is cash, is the $6 billion you're buying. So the downside is relatively limited. Second of all, if there is a dip based on a sandbagging of EBITDA, we know historically what they're doing in terms of their EBITDA multiples and how that's going higher. That means they're just going to raise that eventually. And when they raise that to match the street expectations or go beyond it, which I think there's a hell of a chance they go beyond it, given the tailwinds of tourism and everything else that's happening in Q4. Look, this stock looks like it gets into that $7, $8 range by the end of 2025. That's what the numbers are looking at. This is not my opinion. This is not my subjective random thoughts. These are when you break down the numbers and divide it by the shares outstanding. That's the price targets you look at for the end of 2025. And then for 2026, it looks like we're in that $10, $11 range. After that meeting, which was a good 3-hour meeting, my good friend who might be in the chat, Sachin, gave me a call. Haven't talked to Sachin for so long. Hopefully we'll get him on the channel soon. But we talked for a couple hours and he walked me through his Grab thesis. And he's a little bit more bullish. He thinks $15 by the end of 2026. And one of the main reasons is because he knows a lot of people in the region, given he's from the Southeast Asia region, that are in the company. And the cost cutting that the company does has been gigantic. Like absolutely insane. This has been a company that has realized that they need to get slim. They need to get profitable. Basically, they were a SPAC pump and dump in 2021. Just like Robinhood, just like SoFi, just like Rocket Lab, all of those companies took a shit for 3 years and now they're, finding their momentum. Grab took a shit for 3 years and it's still kind of taking a shit. It hasn't like got off the toilet yet. And basically Sachin thinks they have a good shot to get off the toilet and officially moving forward. because they cleaned up their numbers, cleaned up profitability, cleaned up earnings margins, all that stuff, which is what people have been looking for in the context of Grab. So from that perspective, two people that I really respect, one who's strictly a numbers guy and another one who's such into, I just respect him for a variety of reasons. One of the main reasons is because he went all in on Palantir at $8. And it's like, you have to have a little bit of, and he went all in, not all in, but he made a lot. He went really heavy on SoFi at $7-8 as well. So he has a knack for finding stocks that are beat up and then seeing what the company can do to turn around. And that's because he worked for 30 years in consulting and he's turned around a lot of companies. So when two people like that, and then obviously Chris, who's been bullish Grab for a long time, when three people like that agree on it and the numbers make sense, that's when the story gets exciting to me. So look, I think Grab's going to do well. I think it's going to be a slow mover. It's not going to move that easily. It's going to need earnings catalyst to get there. But my price target now looks like around 15 by 2027, if not at least $10. It's up 3% right now. I don't know exactly why it's up 3%. Maybe it's just moving with the market. Maybe the dollar is down and that's why Grab's moving. But I think that's why Grab is exciting. Now, Grab also did acquire a company in Cambodia that I found out this morning. This was on the 30th, but I'm finding this out right now. Nam24, I don't know if anyone knows this name, but Nam24. That was the company that they bought. Someone says Fubo dump at Bell. Is Fubo dumping already? We got 4 minutes until the market opens. Who thinks Fubo dumps? It's up 182%. It was up 230%. I don't know. I mean, that's strong momentum, but it's up a lot. So we're going to see at 9:30 how this holds up. So Grab and Nam24 joined forces amidst a rapidly growing food and grocery delivery market in Cambodia. So there you go. I didn't even know that happened 10 days ago, but apparently that did happen. And that should be another way for them to grow. The financial services is growing, advertising is growing, deposits in their fintech is growing, and their banks is growing, mobility is growing. The overall mobility sector in Southeast Asia is catering at 10% year over year. So that's another thing to look at in the context of how exciting the market can be because the overall market is increasing. FSD is not a threat to Grab. Eventually it will be, but if you've been to Southeast Asia, you know FSD. I mean, FSD is barely working in Los Angeles and Texas, right? It's not going to affect Malaysia and Thailand and Vietnam. So from that perspective, it's exciting. It's pretty exciting to me, and I think we should see some decent momentum. Final thing I'll say about Grab real quick. So one of the biggest red flags to me on Grab was solved over the weekend. I haven't heard from the CEO. Like, he doesn't do any press interviews, and I'm like, why is this guy so private? Like, I don't like that. I can, Vlad is doing 1 billion interviews. Karp's doing 1 billion interviews. This guy's a founder CEO. Where is he, right? Like, why isn't he on any of these social platforms? Apparently, the guy chills out on LinkedIn. So on LinkedIn, he has 200,000 followers, and on LinkedIn, he's over here riding with the drivers, as you can see, and delivering packages. So he's not on Twitter. He's not on Facebook. He's not like on the conventional platforms, but LinkedIn is where this guy mainly does his content. And he posts a lot of content on LinkedIn. So that was a red flag for me that personally, I don't like when a founder is that quiet. Like, I want to see them being more public. He's very public. He's just public on LinkedIn. So look, from that perspective, I think it's exciting. The father, again, not the father, the founder gave up a relationship with his father. In South Asian culture, you're supposed to take over the family business. He basically gave the middle finger to his dad, said, I'm not taking over the family business. I want to go build the startup. Startup wasn't succeeding for 5 years. Then it started working. The father kind of disowned him, still is not proud of his son's success because he wanted him to take over the family business. So when you give up that type of a relationship just for a startup, it means you want this thing to be real. I mean, you don't want this thing to just go to shit. So I think from that perspective, Grab has a lot of excitement and currently up 3.64% right now as we get into the market open.